Imagine this is your option premium, and every second you're watching it, it is losing value. This is not drama, this is actually your option Greek theta. Hi, I am Pranav VK, your Greeks guide at Stockshaala by Kotak Securities. In this video, we'll uncover the silent killer of option buyers and the best friend of option sellers, theta. Theta tells you how much value your options is losing every single day just because time is passing, even if the underlying stock is not moving a bit. Let's say your call option premium is 305 rupees and the theta value is 5. And if nothing else changes, in one day, your call option premium will go from 305 to 300 just because of theta. Now we understood that if theta equals 5, each day you're losing around 5 rupees. Let's go to the whiteboard and be clear about this example. Here, theta equals 5, the call premium is 305. On day 0, the value of the premium stays 305. But on day 1, it comes down to 300. On day 2, it becomes 295, and on day 3, it becomes 290, and so on. And this is with the biggest assumption that the underlying asset is going to stay flat. Now you might ask, Pranav, but why does this happen? This happens because option contracts come with an expiry. So within expiry, if the contract is not in the money, then the contract becomes worthless. So the closer we get to expiry, the faster the premium will decay. Think of it like an ice cream cone. Initially, you are eating it, but it is not melting so fast. But eventually, it starts melting so fast that the ice cream starts dripping all over. That's exactly how theta works. So let's head to the whiteboard to understand the theta curve for the various options. Here, I have drawn the theta curve for at the money options as well as in the money options. The x-axis shows the time, which is long dated, medium term, and at the time of expiry, whereas the y-axis shows the time value or the theta value. Here we can see that the long dated options have a higher theta value, whereas as it approaches expiry, the value has been reducing significantly. For at the money options, the value falls steeply, whereas for in the money options, it is more of a linear curve. One thing you need to observe is that the curve steepens as the days passes, especially near to expiry. Now let's discuss how theta acts differently for a buyer versus seller. For an option buyer, theta is the worst enemy and in fact a silent killer because as every single day passes, there is huge value that is lost. But whereas for an option seller, this lost value comes in as premium. Now let's take a real market example to understand the concept of theta better. And for that, let's head to the whiteboard. Here, I've taken the example of spot as 25,100 for Nifty. And the strike that I have bought is 25,200 call option, which means 25,100 market is here and I have bought a call option strike of 25,200. And the premium I have paid is 100 rupees. And the theta for this specific call option is 10. The expiry date of this contract is 10th June and the present date is 1st June, which means we have 10 days for the expiry of this specific contract. And now let's analyze how the premium would change, assuming that the spot price will stay as it is. Now assuming spot is 25,100, on day 1, it is 100 rupees. And since theta is equal to 10, on day 2, without anything else changing, the premium has fallen by 10 rupees. And if you go to day 3, it has gone to 80 and so on. And on day 10, it has become 0 rupees. It has become 0 because the intrinsic value of a call option is calculated by spot price minus strike price. Here spot price is 25,100, whereas the strike price is 25,200. Since that is a negative value, intrinsic value can never be negative, and in that case, intrinsic value is 0, and hence the premium has become 0 as well. So in this example, we understood that finally the premium on day 10 will be the same premium that comes as an outcome of this specific formula for a call option. Similarly, for the put option, it is going to be strike price minus spot price, and that will be the final premium value on the day of expiry. In this case, we assumed that the spot price is constant so that you can understand the example better. But in the real markets, the spot price is never constant and it keeps moving up and down. But irrespective, it will always stick to the formula of IV, which is spot price minus strike price for a call option and strike price minus spot price for a put option. And theta value will always start decreasing as and when it approaches expiry. Here are a few common mistakes that most traders make ignoring theta. The first one is that option buyers enter into a contract and keep waiting and waiting for the right kind of direction and move. But unfortunately, if the move doesn't come, then theta kills their entire premium and making them go into complete losses. Many traders buy FAR OTMs because they are cheaper and assume that they are going to make money one time or the other. But the real truth is that theta is going to make sure that this premium becomes worthless because the intrinsic value of an OTM is by default 0. Many traders buy FAR out of the money options not understanding the effects of theta. They buy it because they are cheaper and feel that one day or the other they are going to make huge profits. But unfortunately, theta is highest, especially when the intrinsic value is 0 for OTM options. Here is another thing that you have to remember for sure. Theta works even on weekends. So not accounting for weekends and getting into an option buying position is not at all wise. So make sure that when you're entering into an option buying position, you're also accounting for the weekend decay that's going to happen. Let's do a quick recap of what we have learned so far. We have understood that theta is basically the time value lost for every single day that passes by. We also know that theta is the best friend for sellers but the worst enemy for buyers. We also know that theta decay is non-linear and it speeds up near to expiry. So it's very important for you as a trader to be strategic if you're a seller and to be quick if you're an option buyer. Time and tide waits for no one, especially your options premium. So make sure that you don't fight it but rather trade with it. In the upcoming video, we will decode the final Greek, that is Vega, the Greek that reacts when the markets get emotional. Like, share and subscribe if this video cleared the air regarding theta. You're watching Stockshaala by Kotak Securities. I'm Pranav VK and I'm going to see you in the next video.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.